Pinterest is one of the most misunderstood stocks heading into 2026, and that misunderstanding is exactly where the opportunity lies. Right now, the market is pricing Pinterest as if its growth story is fading fast. But when you actually look at the fundamentals, that narrative simply doesn't hold up. Pinterest is still growing revenue at a double-digit rate. Profitability continues to improve, and yet the stock is trading at levels that suggest extreme pessimism. Let's start with valuation, because this is where things become impossible to ignore. Pinterest is trading at a forward price to earnings multiple that's lower than its expected revenue growth rate for 2026. That's not normal for a profitable, cash generating digital platform. Even if you move beyond earnings and look at forward operating cash flow, the stock still looks deeply undervalued. On a discounted cash flow basis, intrinsic value comes out around $65 per share, while the stock is currently trading near $26.82, not far from its 52-week low. Now, here's where it gets interesting. This isn't just my view. Pinterest is currently covered by 40 Wall Street analysts. Out of those, 30 have a buy rating, 9 rated as a hold, and only one analyst has a sell rating. The median analyst rating is a buy, and the median 12-month price target is 36.90s. That implies roughly a 34% upside from current levels, and that's based on relatively conservative assumptions, not blue sky scenarios. So, if valuation is this compelling, why is the stock still trading down here? The answer isn't one single problem, it's a combination of concerns. Revenue growth is slowing compared to earlier years. Monetization of global users is progressing, but not as fast as investors once hoped. Management has also warned that near-term advertising demand could be muted due to macroeconomic pressures, including tariffs and broader demand uncertainty. On top of that, there are growing concerns about AI-generated content cluttering the platform and potentially impacting the user experience if not carefully managed. Put all of that together and investor sentiment has collapsed. That's why this is not a low-risk stock. When a stock trades near its lows like this, there's always the risk of catching a falling knife or mistaking a cheap valuation for a value trap. But here's the key distinction. The business itself is not deteriorating. Pinterest is still expected to deliver double-digit revenue growth through 2026, and that growth rate is projected to outpace the overall advertising market, which means Pinterest is still gaining market share. At the same time, profitability is moving in the right direction. Operating cash flow margins are now approaching 30%, a massive improvement from where the company was just a few years ago. Pinterest has reached that critical inflection point where it can fund its own growth, reinvest internally, and scale without relying on outside capital. Now let's talk about the business model, because this is where Pinterest truly stands out. Pinterest operates on a user-generated content model. The company doesn't pay to create the vast majority of the content that fuels engagement on the platform. Users create it for free. That engagement attracts advertisers, and Pinterest monetizes the attention. That's essentially zero-cost inventory, one of the most powerful economic advantages a business can have. Costs scale efficiently, margins expand over time, and the platform becomes more valuable as more users participate. And remember, Pinterest operates in the advertising industry, one of the most durable and essential industries in the global economy. Advertising drives consumer behavior, supports sales, and fuels economic activity. As long as people buy things, businesses will spend money on advertising. That relationship isn't going away, it's compounding over time, and digital platforms like Pinterest are positioned to benefit. When you combine a deeply discounted valuation, improving profitability, double-digit revenue growth, strong analyst support, and a highly attractive business model, you get a stock where the risks are real, but the potential reward is substantial. That's why Pinterest earns a spot on my list of the top stocks to buy looking ahead to 2026. This is not a financial advice. Happy investing.